my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. Now, 8 weeks ago, we saw the top of the recent market capped by the upper tine, currently $7.99, of the March to July bullish shift pitchfork. This is a shallowly bullish pitchfork, but one should not underestimate its power. Anyway, prices started and continued a stuttering move lower, most recently being held up by the middle tine, currently at 7.12 of the same pitchfork, in combination with the lower tine, currently 7.52 of the more steeply angled bullish Andrews pitchfork for the same move. Now, this support was not perfect as prices punched down through it 4 weeks ago, as well as the rising short medium moving average, currently at 7.29, and a flatlining medium moving average, currently 7.01. Prices then dropped down to challenge the important January 2021 high at 6.93 and the 50% Fibonacci line for the whole of the 2021 move at 6.89. Both of these buckled, but they eroded enough of the bearish incentive that when prices approached the next supports below them, the important 50% absolute Fibonacci line at 6.75 and the 50% Fibonacci line, the big old 2012-2015 move at 6.70, along with the slowly rising long moving average, currently 6.81, well, these supports were better able to deflect the bearish incentive, enough that they were not even tested, and prices started rising back up again. That was 3 weeks ago. Now, the rise has not been as smooth as the decline. Prices have spent a lot of the time outside of the lower tine, currently at 7.52 of the March to July bullish Andrews pitchfork. This was why I was prompted 2 commentaries ago to draw a new July to September bullish Andrews pitchfork. The lower tine of this pitchfork, currently 7.46, as well as the original lower tine, the original bullish Andrews pitchfork, have combined to force prices higher, back up over the middle tine of the bullish shift pitchfork this time. That's the one I spoke about right at the beginning. Okay, I know that it is a lot to get hold of, but please feel free to rewind and play this bit again of the recording, and you'll see that it does actually make sense. Now, 2 weeks ago, I put forward a caution about a possible very, very large double top Adam and Adam type over the March to date action. Well, that caution is no longer needed. Instead, I would suggest concentrating on the 2 separate bullish Andrews pitchforks and also the bullish shift pitchfork. These seem to be the dominant patterns right now. One final thing to add this week. Take a look at the July to date action, but with the eyes of a possible bullish halfway hesitation in the offing. This is something to consider and ponder should we approach the upper tine of the bullish shift pitchfork once again. Chicago corn. As I mentioned last week and the week before here, the most important feature to consider was the move down below the long moving average, currently at 5.59, especially the second time done 5 weeks ago. This proper break below the long moving average hasn't happened, well, really since November 2019. The questions I posed for the last 2, now 3 times here, were would this market exploit this move lower, and if it did, which pattern would it choose? The first bit was easy, though it was done with some style 5 weeks ago, with a weekly key reversal down. However, prices hesitated around the key combination of the 61.8% absolute Fibonacci line at 5.25, which is also the 2014 high. Eventually, prices did move below this key combination of support, and they did it with 2 main patterns, a sideways triangle and a descending triangle. Now, the sideways triangle was formed on the top side by the 2-pointed downtrend, currently at 5.51, from the start of July, and below by the broken, well broken indeed, August 2020 to date uptrend, which I've left there, currently at 5.77, with its now departing partner, the long moving average, currently 5.59. This had a potential target X in the 5.09 area, which was achieved 4 weeks ago. The descending triangle utilizes the same June to date downtrend on the top side and the flat base of the previously mentioned key combination of the 61.8% Fibonacci line at 5.25 and a 2014 high at the same level. This now has initial target below in the 4.75 area, with a secondary target in the 4.25 area. right on the 50% absolute Fibonacci line. So far, all well and good. However, the market's had some other ideas, and over the past 2 weeks, prices have risen. Enough that we've moved up back over the 61.8% Fibonacci combination all the way till Thursday last week, when prices almost touched the rising long moving average as well as the downtrend. So what does this mean? Well, the obvious choice is that the drop down at the start of September was a false break lower, and I can see the point of that. However, these markets, like life, are usually a lot more complicated than that, and I think this may be the case here. You see, the move back up over the last few sessions has seemingly been a disguised period of indecision, as can be seen by that same Thursday last week being a long-legged indecisive spinning top, but which can also be seen as a countering bearish harami, plus an outside day. Now, admittedly, Friday last week was a bullish engulfing pattern, which was not the hardest pattern to do after an indecisive spinning top. Yet it had such a limited follow-through higher last Monday, getting stuck as it did at the downtrend. However, even the subsequent move down, prompted by this disappointment or disappointing attempt higher, has also ended being a bit of a disappointment of its own. You see, the reactionary key reversal down this past Wednesday, though punching through the flatlining short medium moving average, currently 542, still turned around on Thursday with a hammer pattern. As I said earlier, we've had a disguised period of indecision that is seemingly going on. Hence, though I've targets outlined below, it is as I've said last week, and I quote, "I'm also quite happy to start targeting the top side as well, but only on a confirmed break higher. Keep an eye on this," end of quote. One final thing. I am very tempted to draw a new mid-August to very early October Andrews pitchfork. So far I've resisted the temptation, a bearish one that is obviously, but we'll see what happens the next week or two. I may have to succumb. Thanks for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.